Good morning, everyone. In recent years, the financial world has started paying more attention to climate change and its impact on businesses. A new study by the European Central Bank, ECB, highlights an important shift. Companies that pollute more are now paying higher interest rates on loans compared to their greener counterparts. In today's talk, I will explore why this is happening and what it means for the future of business and environment. The ECB study reveals that banks in the Eurozone are already charging higher interest rates to companies that emit large amounts of carbon dioxide, often referred to as brown companies. On average, these companies pay interest rates about 0.14 percentage points higher than those charged to green companies, which are more environmentally friendly. This difference is known as the climate risk premium. The study also found that companies committed to reducing their emissions could access cheaper credit. This suggests that banks view these companies as less risky because they are taking steps to mitigate their impact on the environment. Climate-related risks are becoming a bigger factor in financial decisions. Banks are beginning to see high-emission companies as riskier, not just because of their direct impact on the environment, but also because of the potential for future regulations that could penalize polluters. For example, stricter laws might require these companies to pay fines or invest in cleaner technologies, which could affect their profitability. As a result, banks are starting to adjust their interest rates to reflect these risks. The ECB study shows that during times of monetary tightening, the cost of borrowing increases more for brown companies than for green ones. This trend could have significant implications for businesses. Companies that continue to rely on fossil fuels and other carbon-intensive practices may find it increasingly difficult and expensive to borrow money. On the other hand, businesses that invest in green technologies could benefit from lower interest rates and easier access to credit. Ben Caldecott, a leader in sustainable finance, believes that the gap between green and brown companies will continue to widen as banks become better at assessing climate-related risks. However, he also notes that there is still a long way to go before climate risks are fully integrated into financial regulation. The ECB study is a clear sign that the financial world is beginning to take climate change seriously. As banks increasingly factor in the risks associated with high emissions, companies will face growing pressure to adopt greener practices. This shift could help drive the transition to a more sustainable economy, where businesses that protect the environment are rewarded with better financial terms. Thank you for listening.